If you think that corrections are movements against the larger trend, you are absolutely right. But if this is true, why should we expect from a correction to make a new bottom in a downtrend or a new top in an uptrend then? Because sometimes the power behind the trend is so much that its inertia forces the retracement to a new extreme. When that happens, the correction which is forming is probably an expanding flat. Ralph Elliott called this type of flat irregular, but in fact it is very common. The expanding flat consists of 3 waves labeled A, B, C and structured 3, 3, 5. 3 waves for A, 3 waves for B, and 5 waves for C. Because of its shape, each wave in the expanding flat is longer than the previous one in terms of price. B is longer than A, and C is longer than B. Now let's see real-life examples. On this chart of Euro-Dollar, you can see an expanding flat in the position of wave B in brackets. In this case, the larger trend is down, since wave A is impulsive. After the end of the whole expanding flat correction at 1.3740, it was time for the downtrend to resume in wave C. If you are a breakout trader, there are 2 points of danger when this type of correction is developing. The first one is when wave B of the flat makes a new extreme, top or bottom. If a trade is initiated there in the direction of the breakout, it will soon turn into a loss. The same is valid for point of danger number 2, when wave C makes a new extreme above wave A. In this example, breakout traders would see it as a bullish signal. Fortunately, the Elliott wave principle would save us some money there. On the next chart of dollar, yen, you can examine an expanding flat in an uptrend. After 5 waves in wave 1, it was natural to expect some kind of a pullback in wave 2. A small wave A, larger B wave, and an even larger wave C formed a perfectly looking expanding flat in dollar-yen in November 2013. The pair then went some 800 pips to the north after this. A more contemporary example of an expanding flat includes the COVID-19 crash of the S&P 500 in March 2020. As the world locked down and panicked, that sell-off actually fit perfectly as the wave C of an expanding flat, which began a year and a half earlier in October 2018. Note that despite its very large size, wave B was still just a simple ABC zigzag in brackets with a triangle in wave B. Wave C was the natural conclusion of that expanding flat correction, preparing us for much higher prices ahead. You can hardly predict that an expanding flat will form, but once it is finished, it is easily recognizable and could provide great opportunities. People tend to become very emotional during C waves. Emotions in trading are not the best partners, however. Knowing the pattern allows us to step out from the crowd and form our own opinions and trading decisions.